Hi, Alan Stratton here from CostMatters.com. When it comes to determining the cost of a product, generally the unit cost of a product, the answer will vary by who you ask. The answer will depend on the background and objectives of the expert that you are seeking advice from. If you happen to ask an IRS agent, Internal Revenue Service, the answer will tend to maximize the unit cost of the product or the product cost. Why? Now, think about it. Income taxes are assessed on income. Fancy that. Income, the difference between revenue and costs. Now, if costs overall are lower, there's more income to tax. So how does a higher product cost, the unit cost, lower overall cost? Well, the answer lies in inventory. The more costs that the IRS agent can put into inventory, the more cost will be deferred to a future tax period, and the more income can be taxed right now. That's revenue for them. Can you ignore the IRS agent and do your own thing? Ha! No way! The agent has the power, if necessary, to seize business assets and shut you down. So, nope. Render unto Caesar the things that are Caesar's. Now, if you ask a certified public accountant or CPA, who is primarily an auditor, the answer will focus on the purchase price of a product, or if you manufacture your products, the manufacturing costs of the products. The product cost will include raw materials, direct labor, and manufacturing overhead. Raw materials are the cost of purchased components or ingredients. Direct labor is the cost of the workers who transform the raw materials into finished products. And manufacturing overhead is just about everything else on the shop floor, up to the point that the product is considered finished. Now, the CPA will ignore, for these purposes, any costs incurred away from or after the manufacturing floor. These non-manufacturing costs he will then label selling, general, and administrative, or SG&A. This CPA will cite various rules that must be followed to have an accurate product costs. And these rules are called Generally Accepted Accounting Principles, or GAAP, or generally GAAP. These rules serve the perspective of outside investors in the company. These rules are standardized to a certain extent, and these rules promote a valuation consistency that investors, mind you, investors, not managers, but investors can rely on in assessing their investment in the company. Now, can you ignore the CPA's advice? Generally, no. The only exception where they can ignore them would be a private company that does not issue any form of financial statements to outsiders, such as owners, lenders, a bank, or other stakeholders. It may help to understand that these rules, GAAP, evolved in the early industrial age, and as companies sought investment capital from a broader range of investors. Now, by the way, not all CPAs will answer this way. Some of us have completed our 12-step program. Now, if you as the owner or manager of the company, you know that you spend money to support your products long after the manufacturing is complete, and these costs can be significant. Your company is not in the early industrial age when costs other than manufacturing costs were relatively low. You now do a lot of support that's later on. Things are different now. As the owner or manager of the company, you need information that helps you make good decisions. It's not those outside investors, it's you. Good cost information is critical for clarity in resource assignment and product decisions. And in this area, I would suggest you need to be selfish and do what's best for your company. Let the others take care of themselves later. Now, sometimes it is said that a company may keep a second set of books. This is never a kind insinuation, but let's look at it another way. Now, in order to do what I'm talking about, rarely will a full set of books be needed. If so, it would be an ethical set of books that are available and transparent rather than restricted and hidden. The first step in this process is to acknowledge that tax calculations and external reporting, that's the IRS and the auditor, those have different objectives and rules than your objectives and rules. Your set of books actually needs to be the first set. Let tax and reporting requirements be the second set of books. Now, if a CPA or an accountant tells you that because of GAAP, that fancy word, that product cost cannot be calculated in a manner meaningful to your business, get a new one. This is for your decision making. So, what's your story about accurate product costs? Now, to your business profitability, I'm Alan Stratton from CostMatters.com. You can find more information on this website. And thank you.